Gary Lipsky is a real estate entrepreneur who focuses on multifamily syndication and currently has $17 million in assets under management. He is the managing partner and co-founder of APT Capital Group. Gary is the co-host of the weekly real estate podcast, Asset Management Fridays. He's also the co-organizer for the Virtual Asset Management Summit, which is going to be held between September 21st and October 4th, 2020. Head over to www.ammichaelsummit2020.com to reserve your spot and have the opportunity to hear from the best in the industry on successfully managing your real estate assets. Welcome back to another episode. Today we have Gary Lipsky joining us here. Gary, welcome to the show.
Thanks for having me, Dion.
Glad to have you on here. So Gary, let's tell our listeners a little bit about your background and how you transitioned into real estate.
Yeah, I've been an entrepreneur my whole life. I owned a restaurant delivery service in college. I co-produced 3 independent films in my 20s. I owned it was an after school, an outdoor ed and leadership development company for 16 years in Southern California. We serviced over 9,000 kids daily. And during this time, I had been investing in real estate. I started in 2002, but I sold that business at the end of 2016 and got into real estate full time. And I got my real estate license. I was attending conferences and meetups, and just really immersing myself and learning because I definitely, I had been reading books along the way, but I wanted to really understand where I wanted to go, and multifamily came up. It was a perfect fit for my background as a business operator, and it just felt natural. And I started investing passively in other people's deals, and then started doing it on my own. So I really wanted to make sure I knew what I was doing as much as I could before venturing out on my own.
So how did you make that transition to going solo from passive?
It's that mindset and saying, well, I'm going to do it. It's as simple as that. So that sounds simple, but it's that iceberg, all that under the water of educating myself and seeing what people are doing right, what people are doing wrong. What can I take from my previous experiences? I've run businesses, most of my life. So how can I apply that to what I'm trying to do now? That was my focus. And, I also joined a program, Brad Sumrock's program, and that really helped. It's that rocket fuel, being around like-minded people. There's plenty of educational content if you want it. There's people that you could partner with, and there's lots of programs out there, and you got to find what's best for you and what you can afford. But for me, that was it provided a lot of rocket fuel to be around those people. I come back energized, and then things start snowballing from there.
So could you tell us a little bit about that first deal that you took down?
Yeah, so I partnered with Kyle Mitchell and Stephen Louie. Kyle actually found the deal. It just came on market, and he had been going there with his wife to Tucson on a pretty regular basis. They'd leave 2 a.m. and get back 2 a.m. I mean, it's just they were really putting in the work, and he was the first to see the deal, which is always, huge. That's how we got both of our deals. We were basically the first ones to see it. And a 42 unit in Tucson looks like a old rundown motel. But with just a little love, we were able to turn that around tremendously. We bought it for $39 a door. And we've actually put it on the market recently for $72 a door. So within less than a year. So we worked on the exteriors, the paint. We changed out the doors. They had sliding doors as their front doors, which are no good. So we put in some nice French doors, and We did some interior upgrades, and it's studios and ones, but there's a huge demand for that, and we're just constantly close to 100% occupancy, so we keep raising the rents, and it's in a good area. It just that property was a true value add. It just needed someone to see the potential and apply your business plan, and boom, we turned it around really fast.
What would you say would be the most difficult challenge that you guys met with that particular deal?
Being newbies, we're raising money for the first time, and you have investors that say they want to invest, but will they actually invest? And even if they say they are, when does that money come in? So it's just a lot of unknowns that you just have to stay positive and keep pushing, and know in your heart that it's going to happen. You just keep moving forward every day and keep pushing, keep working. But until it's all done, until you've done it, you just don't know. And actually, one of our biggest challenges was our loan. So I believe it was around 5%, and Kyle had it originally, and he wanted to bring Steven and myself on, and they said no, you can't bring anyone on. And like a month before closing, we switched the loan, and he brought us on, and I believe we got around 4.25%, so drastically improved the rate, was able to bring us on, provided some comfort level. So we were able to work together versus, I was looking at my own deals in the beginning. Kyle was working on his own. So that team aspect is so important. As an entrepreneur, you want to partner with other people, but you want to control your own entity by yourself. And that was a big mind shift for me. Once I started looking at that team aspect, it really changed, what I was able to accomplish.
So one thing you mentioned a little bit earlier was you had mentioned about seeing the opportunity in that particular deal. And this just kind of brought to mind, perhaps, some people out there might be able to resonate with this, especially experienced investors, the number of deals that do get passed up because the person before them didn't see the opportunity, right? So what would you say, like, how can people learn and train themselves to see the real opportunity behind what it is that they're faced with?
Yeah, I think everything comes down to numbers, quite honestly, because you're not living there. It's not about emotion, if you got to take that out. So if you know your numbers, that just makes everything so much easier. So, we look at a place and, paint, that's probably about 100,000. Doors, 2,000 a door times 42, and if we don't know the numbers, hey, we're walking, if we like a property or close to it, we'll bring our property manager and, ask them what the costs are, and the rehab person, and what what rents can we get. And so you're formulating this in your head, on the back of a napkin, and just kind of getting a feel. Now, certainly you want to really underwrite it, walk the comps, and really, if you like something, if it starts taking shape, you do tons of research and really, analyze every aspect, stress test it. But if you know your numbers, that makes life so much easier, and that's key, because you can go. I could look at a property online and go, just calculate things on my head and say, yeah, that's not going to work, or heck yeah, this has got some legs to it.
So, really knowing the numbers, perhaps people, like you said, one thing earlier too, you mentioned with Kyle and his wife, I believe it is, you said that they were going out to the property, walking these properties. So actually doing these property tours, getting out there and getting in front of as many properties as you possibly can to really familiarize yourself with the marketplace.
Yeah, absolutely. You have to be consistent. You have to develop broker relations, because a good deal is going to go fast, and you can't move fast unless you know that area. You've been working with your investors. You've done all the work so that you can leap on an opportunity, and that's you know doing it part time is people can do it, but it's tough. So we were both doing it full time, and that really led us to jump on opportunities. The both deals we got is because we were the first there, and we went all in right away.
Now, you mentioned earlier that you guys are having an asset management summit here this September. So let's go ahead and tell our listeners a little bit about that, and then I have a few follow-up questions as well.
Yeah, so Kyle's got the same experience as me. He's been in running businesses and operations for 15 plus years. So combined, we're almost at 50 years. And a lot of teachers out there, mentors, are teach you how to get in, how to get started, which is great. You need that. But what happens when you have the deal? And particularly now during these times. You really got to know how to run operations, and I think there are tons of people doing it great, but I think a lot of people out there are struggling, and so we thought there was an area in the market that we could kind of jump in and share our experiences, and then also share with other experts out there. So we started reaching out to our friends and people we knew. So we got a great cast already for this event. Joe Fairless, Neil Bawa, Brad Sumrock, Anna Myers, Brian Chavis, Tim Bratz, Merrill Calliser. So we'll cover all the facets of asset management. It's gonna be a virtual conference, and it's actually gonna be free. September 21 to October 4th. It's so 2 weeks. It'll be a few hours a day. So it's just really easy to digest versus, if you have 3 days in a row all day long for a virtual conference, that's tough. So we wanted to spread it out so you can digest it. And you can find more information about it at amsummit2020.com. That's amsummit2020.com. And we're really looking forward to it. We're, to share things that we know and for us to learn as well. We've got, some great speakers already that gave us a verbal, so we're excited.
So when I think about this, and you just mentioned that you feel that there's a bit of a void here for the asset management aspect. And I mean, it really does make sense. You figure even with these value add plays, I guess if we really were to boil it down to one point as to why they even exist to begin with, it has to deal with managing the assets, issues with managing the assets, right? So what is it about asset management that you feel that a lot of people are missing?
Well, attention to detail. There's so many things that you can do to help your property, and it doesn't have to be one big category of saving 15% on water. Certainly that helps, but all these other little things to increase income, to reduce expenses, and the payoff. If you're at a 5 cap, that's a huge. Let's say you save $5,000 a month times 12 months. That's $12,000 divided by 5%. I mean, we're talking a huge amount when you go to sell it. So there's every property has a huge opportunity. It's that extra percentage. If you're at 92% occupied and you can add even 1%, what does that look like to your bottom line? To your NOI is huge. So we feel if you could manage your property correctly and take it to that next level, there's just tremendous opportunity for everyone out there. And we're constantly trying to learn from others, things that we're not implementing, and we're certainly implementing a lot, but everyone's got a different idea, and that's what we want to share.
So could you give us some examples of maybe some things that you guys have started doing in your business that maybe you weren't doing before?
Yeah. So, we don't rely just on our property management to do everything. We obviously do some marketing ourselves, refreshing listings. Um, we also go through every line item in when we get the accounting, and that takes a lot of time. And every month, I mean, they're very capable, but we find mistakes that we were charged an expense that's from another property, and that adds up over time, or it was in a different category, so we can't measure things correctly. Obviously, measuring everything is super important. KPIs, key performance indicators. So we're tracking, a conversion on, if we get 20 leads that week and we've only converted one into a lease, what is going on? What's that bottleneck? So we're constantly looking, tweaking different ways to market the property. We're always brainstorming new ideas, things that we've learned from others or things that we've just come up with. And a lot of that will be shared at the AMS 2020.
All right. So on this topic of asset management here, you said that you guys had managed businesses for so many years. What kind of transferable skills do you think that you've learned from that aspect that you think directly correlates to what you're doing and you found it to be very helpful to what you're doing right now?
Communication is key. Certainly, I wasn't the best communicator when I started out. Probably too direct with people. I grew up in the Northeast, and that took time. There were a lot of messaging along the way that I didn't do correctly as a young entrepreneur, and so doing that correctly to get the best out of your team, your property management, whoever's working on that property with the rehab, being proactive versus reactive. So just when we work on the business plan before we even put in an offer with the team, we want to make sure everyone's on board. Then we meet again after we're in contract and making sure everyone's on board. And having everyone accountable and having everything on Google so that everyone can see, and then being able to pivot too. A business plan changes over time because whether economic situations change, COVID, there's lots of different things that change. And so you've got to be able to keep pivoting and testing and tweaking and working with your team. And again, making sure everyone's on board, everything makes sense, because I'm not going to be an expert on the rents in that area. Now, certainly I've walked the comps and I could see everything from CoStar reports or whatnot, but I'm relying also on my team that's there, the property management that works with tons of properties in the area. So, trust and verify. You've got to trust and work with your team and have a team of experts, because I can't be an expert in everything, but I also want to verify making sure everything is correct and moving forward and whatnot.
So how exactly are you guys navigating this whole COVID pandemic thing from an asset management standpoint?
Yeah, you've got to protect your investors. So we cut back on some capex stuff, because what's important is for people to be able to lease your apartments. So if it's 1,100, you don't want to do a big rehab and get it up to 1,300. Now's not the time. And you also need to be compassionate with your tenants too and work with them. So we waive late fees as long as they're communicating to us. We waive credit card fees. They're able to use some of their deposit money for rent. You give them any kind of resource we find, we share with them, and we're constantly communicating with them, and we're constantly communicating with our investors too. So it's just making sure everyone feels confident, secure, and 100% transparent, because we're all in this together, and we all want the same thing. No one wants to be in this situation. We want tenants to pay their rent. Tenants want to pay their rent. So, everyone was fearful of May collections, and actually May has been better than April. And, I think we're at 94, 95% right around now. So we're pretty happy given the situation,
All right. So Just as a follow up to that, you said that the May collections you feel it's better than April. So why do you what's the difference? I mean, because when we look at the other indications and everything, I mean, we see unemployment's much higher this month than it was last month, right? So where do you find the difference there? One of the variables.
Well, everyone was fearful of May collections, but the unemployment check started kicking in, so people started having some money. And I guess in April they were fearful of what, as they were getting let go, what's going to happen, and we need to hold on to our cash. But after food, people pay their rent, so I guess those, they were getting their unemployment checks if they were unemployed, and they felt a little bit more comfortable in the situation. And as things start opening up, some are going back to work, or some know that the end is in sight, so they're paying their rent. And you know, and tenants know also that even though that you can't evict or whatnot, but eventually that's going to happen. There's going to be they're going to get bad credit, so they're doing what they can too to avoid those things that will eventually happen.
So would you say right now to investors should be cautiously optimistic about pursuing new opportunities, or we aggressive? Where would you lie on the spectrum right now?
Yeah, I wouldn't be aggressive, but there are some opportunities. There's in any market and any condition, there's always opportunities out there, I feel. Um, but sellers are more, they've softened their terms, but they haven't softened their prices, and a lot of buyers are looking for deals right now, just like us. So you don't really see anything that's 5%, 10%, 20% discounted. That'll come 6, 12 months down the road. And properties coming off of IO, or they lacked capital reserves. So there will be a lot of distressed properties coming up. I think CBRE said like 1.4 billion, something ridiculously high, and that includes single family as well. But there will be opportunities. If we find something right now and we liked it, we would jump on it and take it down. So, but we're just going to underwrite cautiously, because we don't foresee any growth in this year as far as rent. But going forward, yes, you just got to scale everything back and be super, super conservative. We always like to under promise and over deliver. So that's how you keep investors.
Mhm. What you just said, you said you don't see any growth as far as rent is concerned, at least in the immediate term. I mean, that's actually quite telling, especially you guys are in Phoenix and Tucson. And if memory serves me correctly, they've been pretty much leading the rest of the country with rent growth, right? So, I mean, that's quite telling.
Yeah, I mean, we're talking 8% rent growth. I mean, they've been in the top, rent growth, Tucson and Phoenix, the last couple of years. And there still could be potential for rent growth, but we're not going to underwrite it that way. If it happens, fantastic. But you've got to underwrite for a super conservative. Again, protect your capital, protect your investors. If the economy does pick up, which over time it will, it's going to take some time. That's all. That's great to your bottom line, but you've got to be prepared.
So, what would you say has been one of your biggest challenges you've been faced with to date?
Well, we'd love to do more deals, quite honestly, and there's just not many on the market at all. So we've been putting our time into this conference. We've actually started a podcast, Asset Management Friday. So we've been focusing on educating ourselves and keeping our business moving forward. I mean, we've been working, crazy hours still, because we're preparing ourselves for when things open up, talking to investors calling us and saying, hey, I really like what you guys are doing. I'd like to be on your list. And just setting up our business for success.
And what would be a key piece of advice you'd have for our listeners out there?
Keep moving forward every day. And I'm a big believer in working with others, teaming up. It doesn't have to be a permanent, but that provides some momentum, that think tank, sharing ideas and not working in a silo. There's a lot of people out there trying to accomplish the same thing. So, team up with someone else and you're going to accomplish a lot more.
And how can our listeners get in touch with you?
Yeah, my email is glipsky, Lipsky at aptcapitalgroup.com. And on our website, we have a free passive investors guide, aptcapital.com. So check that out and get on our list.
And the summit address again, what was that?
Yeah, amssummit2020.com.
All right. Excellent. Well, thank you so much, Gary. It has been a pleasure speaking with you today.
Thanks for having me. I really appreciate it.